Valentin, Benoit Cœuré of the ECB wrote a speech very recently over the last few weeks, and it was about the importance of Eurozone convergence. The very idea that it's not just Germany that's performing well now, it's countries as diverse as France, as Spain as well. Talk to me about the importance of that broad story that's emerging in Europe.
Well, I mean, it's the case that the recovery is no longer a multi-speed recovery. We really have the breadth of the recovery is unprecedented in the sense that we haven't seen any such concerted kind of recovery across all Eurozone countries. I believe the last time we saw that was well before the Lehman crisis. So it's certainly very encouraging to see that a Euro area, which was plagued by problems of really regional imbalances, is now starting to recover in tandem. This is important for the growth outlook. This is important for the inflation outlook, especially if the sizable output gap in the Eurozone starts to close from here and ultimately underpins the ECB's constructive outlook for the economy. Needless to say, valuation considerations have already attracted a lot of inflows into the region. Yeah. And indeed, the better the growth outlook in countries outside of Germany now, the more inflows we're going to see there. And all that has been playing out really to the benefit of the euro and will likely continue to support the single currency.
Valentin, on the economy, though, I do consider the following quite confusing, and it raises a question as to what the ECB can actually do. If you think about Germany and the performance of that economy at the moment, unemployment is at a record low. The economy is doing very well. German business confidence is at a record high. Yet wage growth is not picking up in a considerable way. And the headline inflation rate this morning came in at about 1.5%, 1.7%. What hope does the ECB have of getting inflation back towards target if the likes of Germany can't get it done themselves in their own country, given the dynamics in that economy at the moment?
Well, if anything, I mean, actually, I'm going to strengthen that point by arguing that if you look at German's unit labor costs, what the Germany is coming from in terms of wage growth is the sharp reduction in those wages we've seen in the early 2000s and indeed in recent years when Germany was still the sick man of Europe. So that to regain competitiveness, they had to go through a very painful adjustment lower in all their wages, and now they're seeing the payback. But if you take the longer term view, actually, their wages haven't recovered really that much. They've actually revisited the levels we've seen maybe 15 years ago or so in real terms. So on that point, I guess the recovery is certainly not helped by the support of the purchasing power of the domestic consumers. And before long, it may have to once again rely on the global recovery for some help, if you wish. But I guess for the time being, it is comforting enough that we are seeing drops in unemployment rates across the board. As you said, Germany is at a full employment. So whether this is going to generate some wage growth, yes, it could. And given the starting point, I think that the first derivative is going to be still strong enough to see some pickup in domestic consumption. Whether that's going to pave the way to a kind of a structurally stronger recovery in the Eurozone, I strongly doubt that. It is the case that really the environment of fairly weak wage growth is predicated upon other factors, not only the cyclical upturns or downturns in any specific economies, and that is something that has structural component to it, which actually any central bank will have a hard time really fighting or indeed dealing with anytime soon. But for the time being, I mean, the ECB could enjoy the thought that indeed a cyclical recovery will push wage growth from here. So the Phillips curve may indeed work for a spell.